Well, after a very long time on the interview, we are having a pharma company. Yes, that's correct. The pharma as a sector is staging a massive turnaround as far as Indian stock markets are concerned. But this is one particular pharma company which was born out of a demerger. It was an existing large business in a financial services conglomerate, and it saw very brutal selling at the time, right after the demerger. But the last few months, there's a turnaround, not only in the stock price, but also in the business. In fact, Nandini Piramal is joining us now, who heads Piramal Pharma, which was born out of a demerger from Piramal Enterprises, about 1.5 years back. And she calls it this year as the year of turnaround and growth. Nandini, wonderful to have you.
Thank you. It's a pleasure to be here.
Wonderful to be chatting with you on ET Now. I think this is the first interaction we are having with you as management of Piramal Pharma. Up till now, you've been working hard in the background. So glad to be chatting with you.
No, it's very, very nice to be here.
So Nandini, let's talk about Piramal Pharma's broad vision, right? Because pharma is something I think you've grown up observing your mother and the company in the previous avatar. Talk to us about, in this role and in this avatar of Piramal Pharma, what is the broad vision of the management next 3 to 5 years? The 3 segments you're operating in, CDMO being the biggest one, what are the full-blown potential which the management team is aiming at overall?
So I think we grew up as a pharma company, and I just actually want to emphasize the values that we kind of started out with, which were, knowledge, action, care, and impact. I think are still very much part of us. And as a member of the Piramal Group, if you look at the purpose, it's also like doing well and doing good. And as a pharma company, one of the things that we put at the center of what we do is both patients and consumers, right? We want to talk to actually everyone across the board in terms of our people saying, how can you put the patient at the center of what you do? And we've got some amazing stories, and one that really impacted me was we had an accountant at a plant. Right now she's like, I'm a finance professional, I can work anywhere. And when I meet you and I talk about, I realized that one of the products that we were working on actually did head and neck cancer, and that product was given to my neighbor who was in a clinical trial, and that gave her extra 3 months of life to see her grandson being born, right? And that is what we do as a pharma company, right? So if you ask me what's the vision, I think it's we want to continue to serve patients and customers and put those people at the heart of what we do. And I think if we do that, and if we can actually serve those people, we'll actually get our other financial metrics of profitable growth after that. So it's, as I look at the vision, it's serving customers and serving patients and having profitable growth. So we want to continue these 3 businesses. We think we have relevant cards to play. In each of these 3 businesses, we think we can make a difference. We can grow profitably above 15% as a company, and we can see a path towards margin expansion. So that's kind of how we look at the business.
Sure. So you very categorically put it, even in your recent communication to the investors as well, that you have an upward trajectory visibility of margins from here on, and a kind of a high teens growth as well. So let's break it down. You're a $1 billion company in terms of market cap, in terms of top line right now, with the upward bias on margins. So what are we talking about? 3 to 5 years, the opportunity size in the 3 segments, CDMO, injectable, complex API, and OTC?
See, I think the markets in these are huge, right? The market overall is huge. There's opportunity, and it's a fragmented market. And so there's a lot of opportunities for growth in various pockets. I think we're still pretty small, so that gives us headroom to grow. I think in each of these businesses, we have a unique strategy, which I think can help us pay dividends. So in the CDMO, we're placed actually with 17 sites across the world, whether it's in the US, UK, and India. That helps us because we can go to a customer and say, look, we'll solve your problem. Tell us how you want to solve your problem, right? So if you want to make it in the US because your board of directors is saying, we want to reshore, great. If you want to do in India and you want to do a China plus one strategy, that's something we can also do, right? So we're open for business there also. And we say, and the other thing that we have is, and that we can offer to our customers is integrated products. So quite often, for example, I'll give you we had a customer that was doing really well, the product was doing well, but their board said, no, we want to make it in the US. So we actually went to them and said, look, we can make stages 1 to 3 in India, and we'll do the final things in the US for you. And that way we can double volumes in the US. You'll still get a made in US, but you'll also get the made in India volume benefits, right? So those are the kind of things that we can go to customers and actually talk to. And there's some people who say, look, I only wanted made in India. Then we're like, come.
So custom kind of a service or solutions.
So in the CDMO business, service is a differentiator along with quality. We've had our last 5 audits with the US FDA, and we've got EIRs for all of them, right? And so that's one of those things where quality, I think, is just a differentiator, and it makes a difference when, customers come to our plants, they talk to the people, not just regulatory audits, we have a lot of customer audits, and they can see the difference.
Sure. So CDMO is a high growth area for you, high contributor to revenue as well. It's about 3,000 odd right now, but it's a game of scale, as we were talking about earlier. So are you, pursuing scale in CDMO business organically only right now, or you would also consider inorganic?
So at this point, I think for the next 6 months, I think focus is on brownfield expansion. We've done a bunch of brownfield expansions over the last year. We are just going to open our Grangemouth expansion for ADCs soon. And that will give us, as those revenues come in, we should see that increase in revenue and not a commensurate increase in operational expenses. So that's, I think, one of those things. The next 6 months, I think focus is on brownfield expansion and getting CapEx ready, I think, and then post, I think this financial year, I think then we'll see what the market says. I think as a company, we're always opportunistic, but right now I'd say the focus would be on, higher revenue growth, increased margins, and also reduction in debt.
Fair point. So what do you aim to say is that maybe you can consider buyouts, but at a later stage, it's not urgency. Urgency is your own revenue growth. Okay, let's talk about something interesting. I noticed that the promoters have infused funds, 1,600 crore approximately, by way of rights issue. So there are two parts. 1,000 crores, sorry. So I want to understand the thought process, because when promoters infuse large sums of money in the business, it's kind of an endorsement, plus the utilization of those funds, if you can talk about it.
So I think the promoters believe in the business. I think that's one of those things that we think that there's a great potential in the business, right? So that's why we did the rights issue, which was oversubscribed by 1.28 times. And, since we've closed the rights issue, we've seen, and, the next quarter has done well. So we've actually used the primary proceeds of the rights issue to reduce debt. So we were at 4,800 approximate crores of debt, which we've reduced to 3,800. And I think the plan is going forward, through a mixture of internal accruals, and we will continue to reduce debt.
So what are the other options of reducing debt? One is internal accruals, which is obviously improving, so that will be utilized. But in a bulk, is there any other kind of strategy?
That's for the next 6 months, that's the plan.
Okay, the other point which I caught my attention right now as well, earlier listening to the con call, was operational excellence and cutting costs and improving or extracting efficiencies from the business process. Talk to us a little more. What are the levers which you're aiming at pressing?
I think, across the board, we are looking at energy savings. For example, we're putting solar renewable power in a lot of our India plants as to the limit that we can do. Our first Grangemouth plant that we're opening is going to be 100% renewable energy. We're looking at energy cost savings and energy efficiencies across the board. Then you continue to look at, in terms of business processes, what are the waste exists in each of these and how you can improve them and get efficiency.
So are these quite meaningful that you have continuously?
I think we have a whole operational excellence team that works across the board in, it's not just one big idea, it'll be hundreds of smaller ideas. And then the idea is it's continuous improvement, right? If you think about our logo is the Gyan Mudra. And the idea between the gap between the circle and the thumb, it kind of means that the journey is never done.
Excellent point. Excellent point.
So it's the same, I think, in whenever you're doing improvements, you'll never reach the perfection. You'll always have to keep trying.
Excellent point. So does that also mean that by Q4 of this year, which you have guided at higher margin trajectory, the process will not stop there? The attempt will be to take it higher from higher teens as well.
Absolutely. I think that's the idea. It's going to take time. It's not a hockey stick. It's going to be incremental growth, and that's how we're going to do it.
Okay, allow me to ask you a question on your margin improvement attempt. There's a view that, one of the business, which is consumer or OTC end of the business, right now does give you top line, but doesn't really, contribute in margins so much. It is actually just breaking even, if I'm not wrong. Do you see that start to improve on margins going forward, or would you even consider, divesting at some stage?
I like the business a lot.
Okay.
I think there's a lot of, again, potential. The Indian consumer is a consumer that wants to buy, is looking for new products, but also cares about value for money. And I think as a company, if you can meet those, they're willing to reward you with loyalty.
Okay.
So I think this is a business of scale. And we said that as we grow through about 1,000 crores, we should see improvements in margins year on year as we get bigger, because then you can spread your advertising and promotion costs over a larger base. And one of the interesting things is because we kind of started out before, the internet existed really in India, we actually had to build our distribution, feet on street, going from, chemist store to get sales, right? And that has helped us a lot.
Is there visibility now, 3-4 quarters down the line?
This is a business which is dependent on the Indian consumer. So it's, we sell in chemists, we sell on e-commerce, we sell in modern trade. And as you launch new products and see what succeeds, I think there's a reasonable visibility going forward.
So once it crosses 1,000 crore, you see contribution from margins, and as it grows, so no divestiture of that sort, because there is a thought process that it can easily get you 3,000-4,000 crore to clean the debt out completely. Not at this stage?
Not at this stage. Right now, it's a self-sufficient business. Whatever we make in EBITDA, we're putting back into growth. So it doesn't require a lot of capital. And then as you focus on profitability, I think you'll get somewhere.
Okay, so sure. So basically it is a child which is feeding for itself, but gradually it will start contributing to the family 3, 4, 5 quarters away. There is visibility at least. Okay, let's talk about the API, the complex API. You've also actually attempted a buyout there in the peptide side. What is the story developing there?
So actually the API generics is part of the CDMO business. And there we see, again, whether you're making APIs for yourself or you're making APIs for a customer, you're using the same equipment, right? And the benefit of the complex of the APIs is that you can make to stock. So it helps when there are kind of gaps in the customer's orders. You can make the generic APIs and sell them to customers. And that gives you, it just again helps you manage your fixed costs and gives you that steady base of business.
Will this also contribute better margins here? Because overall CDMO is slightly on the lower side as far as the margins.
It is part of it. Does have good margins.
It does help you bump up the overall contribution of CDMO margins a lot. What about the hospital generics?
Hospital generics is actually a very profitable business. It's focused on complex generics, which have, I would say, some barriers to entry, and I think that makes it a little more. There's slightly less competition there, than in other generic businesses. We are actually present in about 100 countries, with the US being the biggest, and then Europe and Japan after that.
How big can this part of the business become in the next 3 to 5 years?
This is the kind of business where you have to, like in any generic business, you have to keep adding new products to actually grow.
Nandini, what are your thoughts on the way healthcare overall in India is being seen now? It is in new light. I mean, hospitals have taken off. Earlier, there were very few hospitals. Now there are a bunch of very high quality healthcare being given out via hospitals, and even the citizens of our country are taking standard hospitals very seriously rather than mom and pop type of hospitals, because of the seriousness they are taking in healthcare. Diagnostics have taken up. So how are you seeing the overall development of the way healthcare as a space is changing colors in India?
I think the benefits of hospitals, and I think some of our doctors are amazing, and I think the kind of treatment that you can get within them is probably world class, right? I think the government's done interesting things with expanding the access to primary care, and even things like institutional delivery. So for example, in our foundation, we work with the aspirational districts, which is a program by the PM, where we're trying to work on reducing both maternal mortality and infant mortality. And these are areas which are very, very tough, right? The hilly areas,
Yes.
And that's, I think, where we can continue to improve access to institutions for some of those residents there. I think that'll be also beneficial.
I also noticed, Nandini, that you guys have put out a very interesting annual report this time around. It talks in detail about the plan and the the kind of plan you're aiming at executing. If I ask you to put it in words for the next 1 or 2 years, the immediate priorities of the management, what would those 3 priorities be?
I think revenue growth, focus on operational excellence, cost management, and productivity.
Excellent. Nandini, thank you so much for chatting with us today on ET Now. It was indeed very interesting to chat with you.
Right. Thank
Thank
you.
you. Thank you very much.
Thank you.